Now, we have seen no shortage of factors that are disrupting the global economy, disrupting the financial system over the past couple of years. And the question is, how do we build our institutions to anticipate that which cannot be anticipated? Or maybe more correctly, how do we build in the institutional strength so that we can not only survive, but we can seize opportunities when the unexpected happen? That is exactly what we are going to get into with our next panel, which is going to be led by David Rubenstein, who is the co-founder and co-chairman of Carlyle. He is going to be joined right up here by John Gray. John is the president and COO from Blackstone. And then we have Ken Griffin, the founder and CEO of Citadel. So gentlemen, run, don't walk. Let's get this panel happening. David, the floor is yours. Take it away. Cheers.
Okay, so we have a great panel here, and we're going to talk about every issue under the sun, okay? Why don't we start? You flew all the way from New York here. Why is Hong Kong important to you?
I love that in a Hong Kong audience here. Hong Kong is a terrifically important place for our business as a firm. We've got a great team on the ground. Obviously, it's a place where you can invest capital. It's the gateway to China as well. And so it's an important part of our firm, and we really enjoy being here.
Okay, Ken, when did you first come to Hong Kong?
So I first came here about 30-some years ago. And Citadel has actually invested in Hong Kong for over 3 decades. And like Jonathan, I would say we have a great team here on the ground. It's our most important team in Asia. And Hong Kong is both, for us, a nexus to the entire continent and a gateway into mainland China.
I would just add, I came here about 50 years ago, and there were no underground passages between Kowloon and here. And so you had to take the ferry across. It was 25 cents Hong Kong, pretty cheap. Okay, so Jonathan, let me ask you about this. You built your career initially in real estate, and you built the biggest real estate business in the world, and now you're the president and chief operating officer of Blackstone and doing other things other than real estate. But just back to your real estate days, is the real estate market in trouble because people aren't coming to offices anymore, and therefore tenants aren't going to need as much space? What's the situation? Are we going to see a lot of distressed debt in real estate soon?
So I guess you're probably focused on the U.S. here in this question, and maybe around the world in Europe. I would say there are 2 negative headwinds near term. One is the office market, which you talked about. Remote work hurts demand for office space. There's obsolescence. And I think we'll continue to see pressure in that space, particularly in the United States. It's an area we do not have a lot of capital deployed. I think the second headwind, which people have talked about more broadly on the panels today, is the rising cost of capital. Obviously, if short rates have gone up, more recently long rates, that creates pressure on valuations. I think the good news is that underlying fundamentals in some of the better sectors, like logistics and student housing, data centers, are helping offset some of that. And the second thing I'd say is you're going to see a sharp decline in new construction, which will help real estate over time. But the short answer is, yeah, there's some near-term pressure.
Okay, Ken, you obviously started Citadel, a great hedge fund, one of the most successful out there. You also have started Citadel Securities, which is a global market maker. I had always thought that market makers were people like NASDAQ or exchanges. How does somebody start a market maker, and how you operate all over the world, including here?
We do. We operate in every major country around the world. The exchanges are where buyers and sellers come together, but market makers are responsible for the intermediation of demand in real time. So at any moment in time when a seller arrives to the market, there's a good chance there's no natural buyer. And the role of the market maker is to provide the liquidity at that moment in time. And we do that in equities, in options, in fixed income for over 1,000 clients around the world.
Okay, John, Blackstone started initially as, I guess, an advisory firm, but it did buyouts for quite a while and still does them, of course. Is the buyout market peaked in a sense? It's hard to get deals financed, hard to find big deals, and are you shifting your firm away from buyouts to other areas now?
No, I don't think the buyout business has peaked. There's a cyclicality to the business, as you're aware. And that happens when you're in an environment like this where transaction activity goes down, where it's harder to get financing. That's an environment where you see less deals getting done. But what private equity does is essentially help transform and grow businesses. And it incentivizes management team, provides valuable capital for companies to grow, really creates great alignment. And that function and that ability to generate excess returns for our customers, that continues. Now, we've grown what we do in private assets. Obviously, we have an enormous private credit business, real estate business, infrastructure. We serve a large variety of clients. That's all changed. But the basic business, although a little bit slower today, we still think will grow a lot over time.
So Ken, you run a gigantic hedge fund, as I mentioned. How do you deal with geopolitical risk? Do you have a geopolitical risk assessment team that tells you what crises are likely to occur? And when a crisis does occur, do you have people giving you reports hourly or daily on what's going on in the Middle East or in Russia, Ukraine, how that's going to affect the markets?
So we use a broad array of outside advisors and consultants. To have an idea about geopolitical risk, you need to have people on the ground in all the major countries around the world. That relies upon having a really informed network of experts. For most of our business, the geopolitical risk that makes the headline stories does not impact our portfolio. But then when you see a war in the Ukraine, which puts all energy supplies into Europe in risk, at jeopardy, all of a sudden geopolitical risk becomes front and center in all of your risk-taking decisions. So one must separate the headlines that drive the news cycle from the headlines like the Ukraine that actually drive the real economy in a very profound and important way.
So, John, I noticed that you have no gray hair. So, obviously, I guess the pressure of doing this is not so great. So, is the fun of running a global private equity, private investment firm as challenging as I thought it was, or it's not so tough?
I would say, and you know this well, it's a very challenging job. What's exciting about it is you get to think about some of these powerful trends that are out there. And so it's interesting when Ken talks about the geopolitics, one of the challenges with our business, managing $1 trillion plus of assets, is every day when something happens, it impacts a business, an asset you own around the world. But I think as investors, what you want to think about are these longer term trends. What's happening in digitalization and AI, what's happening in green energy, what's happening in life sciences, which countries are growing faster. You know, some of these big long-term trends are very powerful. And back to the job, that's what I love about the job, trying to think about where is the world heading and how can we deploy capital against that.
So, Ken, I assume people want to go work at your firm. How many people apply a year to work at Citadel, and how many do you take? And what kind of, for those who have children who might be watching here, or maybe people here who want to work at Citadel themselves, what are you looking for in the people you hire? High IQ, high work quotient, they wear a tie, what do they have to do?
Well, if wearing a tie was a job requirement, we'd have a really tough time finding candidates. We've got about 100,000 college applicants this year across North America, Europe, and Asia. I mean, these are from the best schools around the world. That's for about 300 spots between our internship and full-time program. So the bottom line is, it's really hard to get your kid a job at Citadel.
Right.
Now, the good news is, there's 100,000 kids that want to work in a firm that's 5 days a week. So going back to your office portfolio, the younger members of our society want careers. They don't want just jobs, they want careers. And careers involve mentorship and apprenticeship, and you're not going to get that in a hybrid work world. And it makes me so happy to see so many young people around the world want to be back in an office 5 days a week. I think it's so important to have that collaborative culture of mentorship, of apprenticeship that drives innovation, increases productivity, and ultimately for our team allows us to deliver for our clients.
Do you require your people to come into work 5 days a week in the office or not?
We do, and we've been back for 2 years. And I think it's been a big part of our success story over the last 2 years is that ability to work together as a team in a very complex, rapidly evolving world. We've seen more geopolitical crises in the last 2 years than, we've seen in our lifetime.
So,
And to have people together, collaborating together, responding together, has been a huge source of competitive advantage in these financial markets.
Hey, John, how do you deal with artificial intelligence? Will it be soon that you can just plug in a artificial intelligence algorithm and decide to do this deal or that deal?
That might take a couple of years. I would say artificial intelligence has been something I know Ken has been working with for some time. It started with this predictive AI, which basically is put numbers in, numbers come out. So if you're looking at a company and you're thinking about, do they have pricing power, you can look at historical data and then think about the future pricing. You can think about staffing levels, optimizing businesses. And that's probably been the place we've used them the most, and also in helping us on new deals, better understanding the companies. I think what's really powerful now as we move to generative AI, that you can not only put in numbers, but pictures and videos and language, and you can start to transform businesses. So if you think about software companies, creative companies, media companies, really powerful. We own Ancestry.com, the family history business. If you think about over time what that company could do, instead of just telling you your family arrived on this date and they moved here and this, they could do a video, they could have music, newspapers. So I think this is going to be very important for our businesses. I do think they're going to be important analytical tools for us in the alternative space. We've got 50 plus people on our data science team. That's going to grow a lot. If you're going back to the job comment, I think being a data scientist is a very good way to get a job in an investment firm.
Can you use artificial intelligence to make trading decisions?
Well, first of all, I think artificial intelligence is a huge overstatement. I have yet to find a computer that thinks. Now, having said that, we've been using machine learning for over a decade. And on any given day, we're about 25% of the turnover in the US equity market. And that's empowered by a very, very, very powerful set of predictive analytics, of which machine learning is a really important part. Now, one thing to keep in mind when it comes to generative AI or machine learning, it's all rooted in past patterns. That's how these models are trained, and the answers that they give reflect the history that has unfolded before the model was in fact trained. Why do I say this? Tell me about the retail strategy, the mobile retail strategy of your portfolio companies in 2003 before the advent of the iPhone. Non-existent. Non-existent. And yet if you go forward 10 years past the introduction of the iPhone, if you don't have a mobile strategy, you are probably becoming irrelevant as a retailer. And generative AI has no knowledge of this great transformation that was going to unfold. When the world changes, it's going to come down to the judgment calls of people to allocate capital wisely and astutely. Generative AI has a number of really important and powerful uses. We use it every single day to help make our software engineers more productive. But in investing capital, going back to your early commentary, we're thinking about longer-term trends that have yet to emerge or have yet to have played out. And we want to capitalize on that. That's outside the scope and capabilities of generative AI.
So, Ken, you make an enormous amount of trades, I assume, through Citadel every day, but do you have to approve personally all the trades, or do you have to approve them above a certain level? And like today, who's doing the trading when you're here?
So we'll do on any given day about 25 to 30 million transactions. That's a pretty typical day at Citadel. And fortunately, I'm not involved in all but a fraction of a basis point per day. And the reason I'm involved in so little is that we have a very strong belief that the person closest to the information should make the decision. We hold people accountable and responsible for their decision making. That's how we grow leaders. That's how we grow what is one of the strongest investment teams in the world, is all the power is not held at the top, it's held at the front line where people are best informed. Now, of course, I'm looking at the aggregate risks that we accumulate across our portfolio. We're late in the economic cycle. I want to make sure we're thoughtful about how much exposure we have to cyclicals or how much exposure we have to illiquid assets. So I'm thinking about these big picture issues, but day in and day out, my colleagues closest to the information are making the right decisions in real time.
So if you make a trade and it doesn't seem to work out right away, do you get rid of it right away, or you blame somebody else, or you take the blame yourself? How does that work?
Well, so actually, people who blame exogenous events or others are people who don't learn and grow. And those are people who are not part of our team. like if the buck doesn't stop on your desk, whether that's the junior person or my desk, then you're just not of the culture that we look for in people on Team Citadel. We look for people who, when they get it right, celebrate their successes, learn what they got right. When they get it wrong, internalize the mistakes, wonder about what we could have done better, and then from that vantage point, they become better investors of capital.
Hey, John, there's been some criticism that the large private equity firms, as they used to be called, now are in private credit in a major way, and the private credit money that they're lending out is not regulated in some ways. What is your response to the fact that the federal government should come in and regulate what the private credit business is all about?
Well, there's been a lot of discussion of that in the room today. I think the thing people don't necessarily see clearly is the idea that if you lend money as a financial institution and I lend money at Blackstone, you might say those are the same thing, but the question is, how are they funded? So a bank, of course, involves pretty significant leverage. They're a critical part of the financial system, but they're generally 10 to 12 times leveraged. With that, they have their deposits guaranteed as well, and the duration of a lot of that leverage are deposits that are pretty short term. If we're managing money for a state pension fund and we go lend that money on an unleveraged basis, it's pretty hard to identify the risk embedded in that. Same thing if we're running a BDC that's 1 times leverage. So I think it's important in the financial system to understand what's going on, but I think it's critically important to understand the funding source for credit, which is why I think this is actually healthy. It's one of the reasons why the U.S. has been very competitive, broad, deep capital markets.
Ken, Ronald Reagan once famously said, the most dangerous words in the English language are, I'm from the federal government, I'm here to help you. So do you agree with that general view that the federal government may not be as helpful sometimes in regulating financial service companies?
I mean, Reagan is, I think, almost everyone's hero for a reason.
Right.
And I think he's got that statement just completely right in the context of the U.S. financial system. Now, this doesn't mean that we haven't had regulatory missteps, we haven't had large financial institutions that have been undermanaged episodically, but one of the great virtues of the U.S. capital markets is the diversity of capital sources, the diversity of investors, and the flexibility of our economy to allocate capital on a very rapid and reflexive basis. That's been a big part of the reason the United States has been the epicenter of so much innovation and new business formation over the course of the last 100 years. It's underpinned by the robustness of our capital markets. Regulation plays a really important role. Regulation should be in place to reduce systemic risk. And as James Gorman said, the regulators need to be focused on the right big picture systemic risk issues. I'm paraphrasing your words. The 80,000 pages in a CCAR report tell you nothing. You want to stay focused on, will this bank be able to get through a period of economic contraction and continue to provide credit to American consumers and businesses? Right now, I'm very perplexed by the regulatory agenda of the SEC. There's 50 meaningful rules in various forms of approval processes that will really diminish the flexibility of America's asset managers and capital markets, and I just don't understand it. The U.S. capital markets have been such an incredible source of prosperity, job creation, and frankly, just success in America. For the average American family, we should try to encourage capital formation, not discourage it.
Hey, John, the most predicted recession in all time is the one that we're predicting is going to happen, but it hasn't happened yet. Are we going to have a recession soon so people who predicted it can be seen as right?
Well, I would say the good news I'd say on the economy is we definitely are seeing the inflation coming down, which is helpful. We see it in our portfolio in labor costs, the increases there coming down, shelter costs not increasing at nearly the same rate. And also, to your point, there's been incredible resilience. Those are the two positive things out there. I think the challenge is when you raise the cost of capital as dramatically as we have, up to 5.5% in the U.S., 4-ish% in many other places around the world. Now the long end of the curve has also gone up. That's a real weight for consumers and for businesses to borrow at 8%. It works its way through the system. I think we will see a slowdown. We've begun to see hiring at our companies be much more subdued. I don't see this as a sort of cliff, but a sequential decline. But to your point, do I think we'll see an increase in unemployment, slower rates of GDP growth? Yes, but we do not have anything like the imbalances of 08, 09.
So the conventional wisdom in Washington, which many people say is almost always wrong, but the conventional wisdom in Washington, Ken, is that the Fed is done raising rates for the time being. Do you agree with that, or do you think the Fed might still raise rates?
So the wild card we don't know is the inflationary consequences of deglobalization. One of the huge benefits that both Jonathan and I have had in our careers, in our lifetimes, the peace dividend. Remember when I started my business was the end of the Cold War. And the second dynamic has been globalization, which has been an incredibly deflationary force for the entire 30 years that I've been in business. We don't know what a world looks like that involves deglobalization. How much does that increase inflation just systemically around the world? What does that mean in terms of monetary policy around the world? That's a giant wild card. So for choice, I definitely agree with Jonathan. We're seeing inflation come down right now. What we don't know is where does it land in this world of supply chains that are being radically changed around the world. And then with respect to the recession, our best view is sometime mid next year, we're likely to see a slowdown in the back of these higher real rates. It's taking a bite out of the economy, in particular the private sector. The counterfactual to this is the US government is on a profligate spending spree. We're going to run a deficit this year of about $2 trillion in the United States. That's pulling forward consumption into the here and now at the expense of future generations.
So Ken, your firm has invested a fair bit in China, and I think yours has as well. Ken, are you investing more in China? Are you worried about China's growth? How do you assess China right now as a place in which to invest?
Well, I think big picture, you could have been an investor in the United States at almost any point over the last 100 years, had solely a domestic investment portfolio, and have done extraordinarily well. The world's changed. There's much more innovation outside of the United States relative to 50 years ago. This morning I was with one of the prominent Chinese business leaders. The management teams in China are extraordinarily capable. They produce extremely competitive products on the global stage. They lead in many areas that are important to the world: solar, EVs. These are really important competitive advantages that exist in China. Companies, great management teams, great products. If you're a global investor, you've got to be watching and investing here in China.
John, in your current position, I assume you deal with regulators and administrators all the time. Do you find that an uplifting experience to go talk to them about convincing them about your point of view of things, or not so uplifting?
I'm only going to say positive things about those experiences.
Okay, so you like that part of your job.
And I'm going to make sure all my future meetings are with him then.
Okay.
We can go together to Washington if these are your experiences.
So, John, how has the large global private equity firm that's publicly traded evolved in the last 10, 20 years or so?
Well, the business, as you know extremely well, having created one of these firms, was pretty narrow. I mean, we were basically in high-octane strategies in private equity, real estate private equity, and distressed credit. We were trying to produce 20 gross, 15 net, and we had a small number of customers. And when you look today, you've seen a real evolution of the business model. We've expanded who we serve, insurance clients, individual investors have grown to be, almost a quarter of what we do, many more institutional investors, and we've moved down the sort of risk-return spectrum into things like direct lending to companies, asset-backed finance, infrastructure, lower returning core plus real estate. And so the total available market is much larger for what we do today, and we continue to see this migration from all sorts of pools of capital towards alternative assets because of the return premiums that have been generated.
Ken, you were trading securities when you were a Harvard undergraduate, despite the fact Harvard probably didn't like that. And then you ultimately went to Chicago, built Citadel there, and then last year, I guess it was, you moved Citadel from Chicago after many, many years to Florida. So why did you move your entire firm headquarters to Florida?
You know, that's a great story, because in the pandemic, what you saw was that people moved all over the world. And we put a number of people in Palm Beach in the Four Seasons during the pandemic so we could run our trading floor during the height of the pandemic. We could trade the entire US equity market if need be from the Four Seasons Palm Beach. Now, why did I talk about people moving around the world? My colleagues who went to Florida during the pandemic said, why don't we just stay here? And today, Miami is the headquarters for Citadel, and virtually the entire senior management team from Chicago moved to Miami. Now, of note, here out of Hong Kong, we had people scatter across Asia, back to countries that they were from originally, so on and so forth. They've come back to Hong Kong. It's a real statement about the quality of life that Hong Kong offers and about the attractiveness of Hong Kong as an international finance center.
Ken, in the United States, you're one of the largest philanthropists, I think it's fair to say. For people who are listening here or listening elsewhere, how do you decide where to give your money away?
So we look at a number of considerations in how we allocate our charitable giving. But first and foremost is the impact on humanity. Like, first and foremost. Education's top of my list. I really believe that the American dream is paved by the on-ramp of education. And education in the United States has been struggling over the last 50 years. In Illinois, the state that we left, there are 53 schools without a single child who performs at grade level. That's 53 schools full of children who will never experience the American dream. And one of the areas that I think we need to focus on in the United States is being far more competitive in educating our children. We live in a globally integrated economy, and if our education's not at the very top of the charts, we're going to struggle to be competitive with the rest of the world over the decades to come.
Hey, John, in your case, you're also very involved in philanthropy and particularly cancer research. Why are you so actively involved there?
Unfortunately, my wife lost her sister to ovarian cancer related to a BRCA gene mutation, which leads to much higher levels of breast and ovarian cancer and some other types of cancer. And so our thought was, if we dug really deep in that area, we can make a difference. We created a center at the University of Pennsylvania, the Bassler Center, named after my sister-in-law. And it's been amazing in terms of talking about what's changing the world, what's happening in life sciences, the advances today because of genomics and big data, the intersection of those two things. I think it's going to change the world in a profound way. We become really encouraged about what's happening in this area.
Ken, you're a very large political donor in the United States, you know, you've been interested in public policy. Have you ever thought of running for President of the United States yourself? Or you're too young?
Well, I mean, David, given who the front runners are today, I think this question's right in about 25 years.
Okay, all right. Okay, so not right.
I might not remember the question if you ask me in 25 years.
25 years, okay, all right. So John, you're not running for anything, are you?
No plans. I like my day job.
Okay, so when you're hiring people at Blackstone, what's the best way to get a job there? Be very smart, good grades, know somebody. What's the best way to get a job there?
Well, the numbers are similar to what Ken described, incredibly competitive. You know, obviously you've got to be smart, you've got to be hardworking, shown some resilience in what you've done. We love to find people who've been on athletic teams or organizations where they've worked together. As you know, this investing business, particularly in the private space, is a team sport. So you want somebody who cares a lot, works hard, but works well with other people.
Ken, you've built your, go ahead.
To add to that for just one moment, we look for those same traits, and I know you do also. We look for people who are really good communicators. The power of ideas is what drives investment portfolios, and people who are really good communicators have an undue ability, a much greater ability to influence outcomes in our capital allocation. So we look for resilience, because every single person who commits capital is going to make mistakes. You have to get back on your feet. A little statistic, our equity portfolio managers, adjusted for the market factors that they take exposure to, are right 52% of the time, give or take.
Right.
That means you're wrong 48% of the time. Could you imagine like going to a brain surgeon who said like 52% of my patients?
Hey, so Final question. What is the greatest thrill of what you've done in your career? What do you most enjoy about having built Citadel from nothing? Scratch. Other than this panel kind of opportunity that you're on now.
So, I mean, unequivocally, the greatest satisfaction in my career is working with the people that I work with. I work with an incredibly bright group of people. Every single day, I learn something at Citadel. That's number one. Number two, impact matters. And I know that in the start of the pandemic in the United States, we played a very critical role in helping to coordinate between the private sector and government on issues like accelerating trials with the FDA for experimental treatments. And ultimately, Operation Warp Speed, which probably saved 500,000 American lives, came from my team at Citadel. It's one of the greatest successes, I would say, in my career is to be part of that group that took to the Washington the concept for what became Operation Warp Speed.
Final word?
Well, I would just say as it relates to me and my experience, I agree with Ken. It's the people you work with, the impact you have when you're managing capital. You know, you're working for the police officers, firefighters, the retirees. You're trying to make a difference and then trying to help grow companies. I mean, what we did at Hilton Hotels and some of the other businesses to help them expand globally, to create opportunity, to create some wealth for other people, and to do it in a team sport and feel a real sense of pride, that's a lot of fun. So I feel very blessed at what I get to do.
We're out of time. Thank you both for a very interesting conversation. Thank you.